Welcome back. Today, I'm going to talk about something very important. I'm going to talk about the effects of the tariffs that has been imposed by President Trump, and I'll also going to talk about a little bit about the deportation of immigrants, deportation to the immigrants, thousands, and how it's going to affect the U.S. Housing market, namely the new construction market. National builders, local builders is going to affect all their products. Furthermore, do you remember back in during the pandemic, the housing boom, and you have bidding wars, and you have multiple offers and everything else back in 2021, in 2020, and 2022, and where a lot of homes are just flying off the shelf. What we have seen during that 18 months period, we have seen a shortage of lumber. It was a mass lumber supply. The builders, they couldn't build homes fast enough, and the lumber cost so much that the builder have to raise their prices dramatically during the pandemic housing boom. Consequently, a lot of those buyers, they have to buy. I know many of them will buy new homes, resale homes during the pandemic, but a number of buyers are also buying new construction homes. They have to pay a higher premium price due to the lumber shortage. This has been, if you recall, a few years ago, is a very big deal. And today is no exception. Not only the construction industry consists of largely, we're talking immigrants, the labor pool. Immigrants are that's a labor. That's how the houses, new homes are built by, again, by deporting Trump, by deporting thousands of lost labor out of the country. Is going to impact, it's going to cause home building to subside, and it's going to cause labor shortage in the construction industry. And consequently, the builder, they have to find new labor. It's going to cause delays in new constructions of homes throughout the country. The ripple effect is very dramatic. It's going to raise prices. Lack of labor, materials are getting increased, and the tariff as well is going to affect the entire real estate construction industry. Toward the back end, just stay tuned toward the back end of this video, because who's going to, the tariff and the immigrant deportation and the labor cost and the labor market is going to cause a ripple effect. Consequently, I believe in the next few years, sooner than later, new home prices is to be increased. The builders have no choice but to do that. And you as the end buyer, whether you are a real estate investor, like many of our investors, and who are buying new construction cash flow homes in various markets, I'll talk more about that later. You're going to have to pay higher prices for those new construction homes if you buy too late, if you procrastinate. For the regular primary home buyers in the various national market all throughout the country, same thing. Especially if you're a first-time home buyer, try to buy new construction, you're going to have to pay a higher price. The affordability factor is going to affect a lot of people, and the ripple effect is very dramatic. I'm going to first start off by going over this article that are done by National Association of Home Builders. Builder confidence falls on tariff and housing cost concern. That's right. The tariff situation, it will bring the construction housing industry to a very challenging point. Let's go over some of those topics that was published February 18th, just the other day. Today is the 19th, just yesterday, as a matter of fact. So here's the article. Builder sentiment fell sharply in February over concerns on tariff and, of course, the usual elevated mortgage rates and high housing costs. Builder confidence in the market for newly built single-family homes was 42. Now, I'm going to explain this numerical metric momentarily. It was down 42 in February, 5 points from January, and the lowest level in 5 months, according to the National Association of Home Builders, NAHB, Wells Fargo Housing Market Index, HMI, released today. Uncertainty on the tariff front help push builders' expectation for future sales volume down to the lowest level since December 2023. Incentive use may also be weakening as a sales strategy, as elevated interest rates reduce the pool of eligible home buyers. In case you're not aware, many of our investors have taken advantage of the builder's incentive, because a lot of builders in the past year are incentivize our investors to buy new construction cash flow homes in various markets, which I will go over toward the back end of this video. What that means is that the builders are absorbing the costs. Is a forward commitment program whereby the builder is paying down the rate for our investors. Normally, investors, when they buy investment homes, they have to pay a 30-year fixed rate mortgage of like 7.5%, which is usually a little like 50 basis point, usually higher than the standard rate as reported by companies such as Mortgage News Daily. With the mortgage rate right now for the primary home market is around 7%, investors usually have to pay 50 basis point higher at 7.5%. That's going to impact the investors' cash flow because of the higher mortgage payment on their debt service relative to the rent value. Builders have been giving our investors incentivize the lower mortgage rate anywhere from 4.75% to 5.75% 30-year fixed out of the builder's cost, because they want to sell the homes. And so that's going to help investors to achieve better cash flow. However, and also our builders in various markets that we provide off-market listings, we're also able to provide investors with a 1 year of free property management, and also they are willing to pay 1% of the closing costs. So tremendous amount of incentives that are being given away to investors, for our investors, especially to buy those great cash flow homes in growth markets, which I will talk about a little bit later on this video. It's going to affect the incentive, as I said. So let's go on with this article. The tariff is going to have a ripple effect with 32% of appliances and 30% of softwood lumber coming from international trade. Uncertainty over the scale and scope of tariffs has builders further concerned about costs, said NAHB Chief Economist Robert Dietz. And see, reflecting this outlook, builder responses collected prior to a pause from the proposed tariffs on goods from Canada and Mexico yielded a lower HMI reading of 38, while those collected after the announced 1 month pause produced a score of 44. Addressing the elevated pace of shelter inflation. Remember, shelter inflation, meaning how inflation is costing the housing. This is consumer shelter inflation is really hurting the housing market in terms of a higher costs. You have to pay more. Inflation, shelter inflation, requires a bending the housing cost curve to enable adding more attainable housing. There's a lack of the shortage of housing. It's been for a while now. The latest HMI survey also revealed that 26% of builders cut home prices in February, down from 30% in January. And that's the lowest share since May of 2024. The use of sales incentives was 59%, the one that I just talked about, right? In February, down from 61% in January. We have to monitor the continuing issuance of builder incentives, which our investors love. I mean, you're getting better, lower interest rate, lower costs, higher cash flow as a result, because your payments are lower, so you can achieve better returns. The current single-family home sales and sales expectations for the next 6 months are being surveyed, are being categorized as good, fair, or poor. Okay, and any number over 50 indicates that more builders view conditions as good than poor. All three of the major HMI indices posted losses in February. The HMI index gauging current sales conditions fell 4 points to 46. The index is falling. Looking at the 3 months moving average for regional HMI scores, the Northeast fell 3 points in February to 57, Midwest moved 2 points down to 45, and West Edge 1 point lower to 39, and the South held steady at 46. Now, again, the ripple effect is that the tariff is going to cause materials that are being imported from Canada and Mexico and even other overseas locations. It's going to raise the price of lumber, the price of constructional materials for houses, and the builders have no choice but to pass on the cost to consumers, to home buyers, for primary owner-occupied home buyers and investors like our investors who love buying those new construction homes from national and local builders. For our investors, this next, I'm going to show you, just goes to show you that it's imperative that that we're helping to buy. Our new investors are buying new construction homes right now in Oklahoma, Florida, Alabama, and Tennessee and Texas. I challenge our investors to these new construction homes in the growth markets that we've been promoting for the past who knows how long. And the builders, like I said, they are incentivizing builder incentive, 5.75%, 2% in closing cost. We don't know how long this incentive is going to last. Based on the article I just read to you, this incentive might be gone. If these incentives are gone, you're not going to be able to get the buy down of the rate, so you can cash flow a lot better. So you're going to have to pay the regular ongoing rate, which could be 7.5%, right? Then you will have no more cash flow. So it's important that if you have the capacity, if you have the goals of buying new constructions in a fast growth market, do it now before these prices will be increased. And not only that, the market that we are promoting organically is going to appreciate anyway due to housing shortage, due to population growth, due to job growth. And this example, look at this new bill in North Texas. It's not even barely $200,000 new construction, all this incentive. And here too, look at this great prices that you're getting. This national and local builders are helping our investors to buy these off-market homes at a reduced price, maybe like 5 to 10% below market value, because of our negotiation ability with the national and local builders in some of these markets. Like in North Texas, look at these great homes. These prices will go up in two ways. The builder going to increase the cost due to the tariff and due to deportation of immigrants from the U.S., and that can create a labor shortage. It's going to cause delays of home construction. It's going to cause construction, the materials, everything to go higher. The lumber cost is going to go higher. Tariff, deportation, and the ongoing high mortgage rate is going to have a ripple effect. My urgency is, investors, you need to pull the trigger now if you can to buy these great growth, suburban, boomtown markets that, as we are discussing, with tremendous high cash flow. Look at these new homes. You're not going to get these prices. Again, these prices will go up two ways organically because of the growth of the market that we're promoting, plus all the reasons why I just told you that the builder have to increase their cost because of tariff, illegal immigrant deportation, and the shortage of labor. So look at some of these new construction homes, like in this case, like $150,000 in Oklahoma. Great cash flow, great incentive. Duplex, same thing. Very inexpensive, very affordable, fast-growing suburban Oklahoma. I'm not gonna go over in details because on my other videos we talked about it in very detail. Same thing. Look at South Texas, great fourplex, only $549K, very good cash flow, brand new construction. And Alabama, I know, sorry to skip all this, but in Central Texas, all this new construction, very low price, below market value price. And this is amazing. Right now is such a great time to buy, to take advantage of all this builder incentive, all this single family home, duplex and fourplex, brand new constructions. These prices will go up from all this market. Look at Florida, even Florida, especially Central Florida, all these nice new construction homes, these prices will go up due to population growth, job growth, the labor market, and the tariff, and the construction costs, and the builder are going to pass it on to you. See all these great strategic locations of homes in Florida, not in a flood zone, not in hurricane zone, all those kind of things. At the end of the day, I create urgency not only for our investors, but for primary homeowners out there and all across the country, especially when the builders are building and in the Sunbelt Western region and the South and Southeast, when there's a lot of new homes out there. All those homes, in my opinion, will increase in value. So don't delay. Create interest. If you can have the ability to buy, take action now before these new homes, you could have to pay more. That's all I have to say. If you haven't received any value from this video, please like and subscribe to my YouTube channel. And also, if you're new to my channel, I encourage you to put down your email into my website below on our database and click on the newsletter so you can sign up, put your emails on there so you can become a free member of our network, free member of our organization, so that you will receive free information pretty much every morning on real estate investment opportunities and education. Thank you so much for watching. I'll see you in the next video. Have a nice day. Bye-bye.